What's going on, everybody? It's Jeff here. Welcome back to the channel. Friday before close, the entire market saw a lot of buying volume coming in. It was a good indication of what was going to happen today. And as you can see, the entire market moving steadily up throughout the day, especially the tech sector leading the indices ahead of some very important earnings. So in this video, I want to answer the big question a lot of people have been asking me. Have we found bottom? Is this the move to the upside? I did talk about this in previous videos, saying because of how quickly we sold off and how dramatic it was, I do see a bounce happening. It's not just an intraday bounce, but a few day bounce getting us back to some critical levels, because naturally we don't move in one direction forever. I want to talk a little bit about that. And then I also want to talk about some comments the Bank of Atlanta Fed president had stated about his outlooks on where he sees interest rates and inflation, and why potentially it could be an indication that investors may have overreacted on the sell-off. So let's get right into it. First off, we are already starting to see articles. The sell-off is nearly over, and history says these stocks bounce back first. In the last video I made, I did say that normally when there is a massive sell-off, the next 6 months, we do end up green, varying all the way from about 1 to 3%, I think all the way up to 17%. And as you can see by looking at the markets, which we still have an hour going into close, we are green throughout. The NASDAQ, the tech sector, leading that at positive 2.7%. You could also see here the Russell 2000 up almost the same amount. Now, the Russell 2000 is made up of all your small caps, and a lot of small caps were beaten down very heavily, some of them down 70–80% of the highs where they were last year, getting a little bit of relief and a little bit of rebound as money comes pouring back into this. So let's take a look at the charts really quickly. As you can see here on the SPY, there was a lot of buying pressure and volume coming in. This was a little bit of a trap here. I did see a potential for a little sell-off coming into the SPY. It's natural. We had a good rally. We're going into the weekend. The chart did look like it was going to pull back a little bit. I did believe it's bounced off of VWAP on the intraday, and then just an extremely explosive move into the close on a Friday, which was good to see. No, completely understandable of why today moved the way it did, because of all of that buying pressure coming through. You can see it held above that support level. We hung around just from that 439, 440 level, and now we're going to close somewhere around that 438 level, which is where we are at right now. But if we look at this from the daily chart, okay, I'm going to zoom in for you, and I really want to highlight this because you can see here all of these wicks. All right, these are a very bullish indication. It means there are buyers ready. When the price gets down to this level, there are buyers standing with their money on the sides, ready to pour it into the market, and a bigger move was coming. Now, we did get an intraday bounce up here, back up to about that 443 level, from all the way down to 425 to that 430 level, which was a big bounce. And I had talked about that on I think it was the 24th, 25th, right before that Wednesday, just naturally looking at the charts and because we were oversold. But I still thought a bigger move was going to happen, and seeing that 460 level is not out of the question in the short term. I don't think that we are completely out of the clear, because naturally if we make an explosive move, all right, from this 430, 435 level back up to 460, there's going to be a lot of profit taking happening. Okay, so just look at some of these key levels. We still want 430 to hold and get soaked up like it did. If we do pull back, we're gonna have a little bit of resistance right here at that 454 level. But naturally, the market is still strong. And when we zoom out just a little bit further and look at the weekly chart, we're still moving up. We bounce off the 50-week moving average, and just this little bit of a breather is good in order to be able to pull back, let some profit taking occur, bring the money back into the market in order to get that next leg higher. Now, we still do have all of the obstacles in front of us that mentioned when it comes to combating inflation, interest rates, and so forth. But there's something I want to shine a light on. And before I do, okay, I remember JP Morgan, and I had mentioned it in one of my videos, and this is just coming to me right now, had stated that he saw 7 rate hikes this year. And I had said, listen, 7 would just be one right after another after another. If you think about it, they're going to start this in March. It's about 9 months left in the year. All right, if they are still doing as planned of their quarter point basis points, that would be 1 every single month. There would be no time for adjustment. and you would more than likely crash the not only stock market, but the economy, form us into a recession, and not want to just get political, but it is, there are midterms happening this year. It is an election year. So that's something that, these guys are thinking about, that they want to make sure that the economy market stays healthy, okay, in order to continue that going forward into November. But this is what the Fed president stated today. Now, if you don't follow Walter Bloomberg, he is a wealth of information and he gets it in the information out very, very quickly. But there's three things I'm going to highlight. The first is going to be a 50 basis point hike is not preferred. All right, and we had talked about that, and I had said that Jerome Powell had stated he wanted his quarter point raises. However, in order to get things really rolling, seeing that 0.5% increase is not out of the question. Well, he stated today that it is not the preferred policy, which that is a good indication that, like I said, the Fed wants to keep the economy and the market stabilized in order to combat inflation. They don't want to basically just throw one under the bus in order to get inflation down. But more importantly, he still has 3 rate hikes penciled in for 2022. Okay. And as we've talked about before, the market has already adjusted for 4 or more. Okay. So 4 or more. So seeing that he still has 3, that we are ahead, and the market has room to rebound back to that 454, which we're going to have a little resistance, like I had mentioned before, but getting back to that 454 to 460 level is not out of the question, especially because he has 3 rate hikes penciled. On top of that, he sees 3% inflation in 2022 with 3 rate hikes. All right. So to me, that is astounding that, one, they're going to be able to, come in a little bit subpar of how many interest rate hikes they had scheduled, because I think they had, the Fed had mentioned that they wanted 4, all right, even though JP Morgan had mentioned 7, but he still thinks 3% inflation. It's a little bit higher than what Jerome Powell wants at 2%, but considering of where we are sitting right now at 7%, which is actually, I think, fundamentally lower than what the realization is, seeing that we get back to 3% is positive news for the markets. Okay, so look at that to happen over the short term. Consider to see potentially a little bit of a bounce getting back up to higher, that 454 level. Then you're going to see some profit taking, especially if this happens very, very quickly. So guys, that is it for this video. I hope this puts a little bit of bullishness back into you, especially because I know seeing how far and quickly the market had pulled back, can get things a little bit on edge, and just to see exactly when a bottom is going to happen. But that 430 level got soaked really quickly before I let you guys go. If you look at the QQQs, it's really the same chart, but it's just a little bit different. That 340 level got soaked so heavily. Buyers are ready to step in. We are going to have a little bit of resistance right here around that 360, 383 level, which is the 200 moving average, going forward. So keep that in mind. This is all your tech sector, guys, but that's it for this video. I'll see you in the next one.